Hey Jason, thanks so much for joining us today. Appreciate it. We're just gonna go cruising here on the Real Estate Social Club podcast.
Thank you for having me.
Of course.
Thanks for taking me on this drive.
Yeah, no worries. Guess where we're going?
No idea.
We're gonna go to Costco.
Let's go.
And we're gonna get some gas because that's the spot here to get good, cheap gas.
Nice. So we'll be in line for like 2 hours. This is about a 2-3 hour podcast.
You got that time, right?
Yeah.
All right, cool. I mean, it is Friday, so we're just
it.
trying to get into the weekend. Just if you can give our viewers just a quick, bio about yourself. Go ahead.
My name is Jason Sampson. I am a real estate entrepreneur. I grew up in California and grew up in Northern California, moved to Southern California for college and lived there for about 20 years and moved to Hawaii about 3 years ago and 4 years ago to be closer to the family. I've been in the tech industry for over 15 years of my career.
What did you do in tech?
So in tech, I was a product manager for a lot of fintech companies. I was in e-commerce a little bit too, but mostly in financial tech. And product managers are people that are at the intersection of business, technology, and the customer experience. So, jack of all trades, a little bit of building the experience, a little bit of business strategy, a little bit of understanding the technology, a lot of teams, cross-functional teams. I just mentioned all that because a lot of that really comes into play and is beneficial in real estate and entrepreneurship, and building teams and working with teams and stuff.
So you feel that your experience in product manager has been quite helpful as you transition to becoming a real estate entrepreneur?
Yeah, I think, I was an entrepreneur for a long time, which meant that I was building a lot of products, getting them to market and everything. And so I was a serial entrepreneur. And so now that I'm in the entrepreneurship space, not just in real estate investing, but starting some small businesses and small revenue streams, it's a very familiar place for me. But instead of doing it within one company, I'm doing it for myself as an entrepreneur. So it's a lot of the soft skills of managing people and working with people is super helpful.
And I think, we met about a year ago at a Deals in Aloha meetup event.
Yeah.
And I think when I first met you and knew about your background, it kind of resonated with me because I'm also in that kind of space. I do project management. So I think it immediately clicked and I loved your entrepreneurial spirit as I have one as well. So I appreciate your friendship and, taking some time to kind of talk story a little bit about what you do. So I wanted to ask, with your experience in real estate, I know that you have one of your own companies. Could you tell me a little bit about that?
Yeah, one of the companies we started. So I started in the real estate investment space as far as just wanting to get and start short-term rentals and also in furnished rentals. And as I started to do that, I realized that I need to start a mentorship and really focus in on that space. And so I joined a mentorship for furnished rentals and really got into it. And after getting a few properties and through partnerships and everything, I realized that this is something that can be scaled. And so one thing that I ended up starting with the business partners is a property management furnished rental company. And yeah, that's been a journey in itself. We started it about a year and a half ago, and we've grown from our own portfolio of properties that we have collectively owned together to over 65 properties and units that we manage.
That's huge.
Yeah.
And the 65 units, where are they located?
So we have mostly Hawaii area, and then we expanded to California, Florida, and some parts of Texas and Vegas area. So we have some, footprint across the country, but high concentration in California and really, really high concentration here in Hawaii.
Got you. Would you say percentage-wise, maybe 80% in Hawaii?
Probably about 70%.
Okay. And tell us, what about, do you have any disaster stories or issues managing properties? I'm sure you do have one, but would anything come to mind?
Yeah, there's probably one or two. I mean, there's managing short-term rentals and furnished rentals. You get a lot of stories. So the one that really sticks out is we had one of our units that was burglarized.
Oh, wow.
And this is one of our units in Florida. So imagine on a random Friday night here in Hawaii, it's about 6 o'clock over here. It's over midnight over there. And we have somebody who checked into a unit and they said, hey, this place is totally trashed. And we realized that someone not only burglarized the unit, but they were potentially staying in the attic for a few days, waiting for somebody to, check out so that they can stay there. And I believe it was somebody who did not have a place to stay, and they were staying in the attic. And then once it became vacant, they used the place. So midnight over there, we, had to deal with the police reports and all of that stuff, which was a pretty eventful night. But just another day in property management. But what we did learn was we needed to have better surveillance. And
Okay.
so we had some surveillance and some cameras, but we beefed up our camera systems, and now it's totally safe and everything's good from here. So
No, that's a very interesting story, and I bet you it was probably really stressful. I guess that leads me to my next question.
Sure.
How do you deal with the stress of managing so many properties?
A very good team.
Okay.
I think understanding how to build a good team and have the good systems and processes for the team to be able to manage. I think that's one of the things that I was able to really get from my years in corporate and, managing cross-functional technology, marketing, and business teams, was understanding how to work with all different types of people, and knowing how to manage people. And so I've been able to build a team of virtual assistants overseas and a small group of boots on the ground people here in our markets, and understanding just how to put the right people in place has been good. So,
and
doesn't mean that you reduce the stress.
Okay.
You just spread it around a little bit.
You're like, here,
Yeah.
stress for you, stress for you. For what do you think people that want to invest, what do you think their hesitation is coming into, becoming an investor for either a short term, midterm, or long term? What do you think is the hesitation that people face?
I think a lot of people stay on the sidelines because I'll say it takes one to know one, right? I've been wanting to get there. There was a good 5-year period where I wanted to get into real estate and become an investor, but I was someone on the sidelines that was reading all the books, listening to all the podcasts, but not taking action. So the longer you stay idle, the longer you stay on the sidelines, the bigger your fears grow and the more stories you tell yourself, right? The more you listen to the outlier exception of media, right? You hear that one story about that one Airbnb in California where somebody was squatting, and you think, oh, that happens everywhere. That was a one-off case, right? Yes, there are some things that happen. It's not just the only case, but it's not, it's not the trend. It's not what's actually happening. And so the more you listen to media, the more you listen to horror stories, the less you actually know what it's like to be in the arena and doing it. So I think people are scared because they're on the sidelines and they collect all the different fears that are out there and they don't take action. And so my biggest thing is just take action, get in the game, get in the arena, and one of the best places to start is either join a mentorship that is specific to what you want to do. Don't join a mentorship that says, I'm going to do everything real estate. Like, pick the one thing.
What's an example?
Yeah, so I picked furnished rentals, right? And I said, I'm going to join Rob Abasolo's, Rob Built host camp, and I'm going to learn that. Another one is like, I want to learn creative finance. So I'm going to join Pace Morby's Sub 2 a mentorship to learn creative finance. Like, find the thing. I want to do fix and flip. There are 5 different fix and flip amazing mentorships here in Hawaii that you can pick and choose from. Go find the mentor, Zasha, Fuzzy, Max Gaines, anybody, right, that you think is going to fit what, that speaks to you. Join the mentorship, join that community. And I think that is a place to start. The second place, if you don't want to do that, is find a partner and JV, right? And just say, hey, how can I de-risk this and join, somebody else to do it along with me? One of my first investments I did with my brothers and my brother-in-laws. So the 3 of us got into a property together, split the risk by 3, split the investment by 3, and we got in the game.
That's a good point, because it is scary and risky, especially kind of taking that chance. It's a big risk, right? It's a lot of money. Most people just, if they get the opportunity to just buy a home, their primary residence, that usually is one of their goals, right? But to think as a small mom and pop shop investor, I think a lot of people don't think that it's possible. So I think, what you said is actually really valuable, and getting that mentorship, getting that education, but also knowing that you know the steps so that you educate yourself, and lastly, taking that action, because you can, I've spoken to you about it. You could go through, what is it, analysis paralysis, right? And absolutely. You kind of get stuck in that and all this information. So I appreciate that. Thanks, Jason.
Yeah, of course. I mean, I think it's something that, it takes one to know one, right? I've been there. I've analyzed things. I just sat there and I'll forget about it. The thing about inaction is you can procrastinate for a long time and just be like, oh, I thought about investing, and then I didn't take action because I got scared, and then I went on with my life, and then 3 months later, 6 months later, I thought about it again, then I forgot about it, and then all of a sudden 3, 5 years pass by and you don't do anything. And everyone in real estate will tell you, the sooner you get in, right, time in market, right, is valuable than timing the market. And so, you spend all those times, 3 to 5 years, you could have been in the market in appreciation on a rental property.
Appreciation in a rental property. What's an example of that? Like, what is the reward? You have that risk of going in, getting an investment and, turning it into a short term or midterm. What is the reward?
I mean, everything real estate comes down to three things, right? You can get income from cash flow, you can get income from appreciation, or you can get income from tax depreciation and tax benefits. So those are the three main benefits of getting into real estate. And so, it's great to be able to get something that cash flows. I think that's why I like the furnished rental route, because you can invest a little bit more in furniture up front, and instead of getting a few $100 of cash flow from a long-term rental, you can get hundreds or maybe thousands as a furnished rental. So that's the cash flow part of it. The appreciation is just, if you're in a market that grows, as far as appreciation and in value, like Hawaii or other markets that you choose, that's where the real wealth comes. Someone told me before that cash flow can make you rich, but appreciation makes you wealthy. And so being in it for the long game is really what you want to do. And then the tax depreciation part of it is something that it's probably like the next level of it feels like all these wealthy people, all they talk about is taxes, because they're trying to figure out all different tax strategies. And so that's kind of the next level of it, but know that is something that you can do to help your situation out.
No, that's great. Now, in terms of what do you think about with the tariffs and all that? That's directly going to affect a lot of industries, and real estate's one of them, especially the tariffs on China, right? We see that it's around, what is it, 25% or something like that?
As of yesterday.
As of yesterday, right? Yeah. And, a lot of our home goods, faucets, all that stuff is built in China. So how do you think it's going to affect numbers in terms of fix and flips and that?
It's just going to be wait and see right now. I'm not going to sit up here and say that I'm an expert on it. I am paying attention to it.
Monitoring, right?
Monitoring. I don't know if I have anything additional of value to add to what everyone else is saying, which is just a lot of speculation.
Right.
The speculation is, will that cost be, added on, and are consumers, or, in this place, investors who are getting the raw materials or stuff, or is it just being passed on? And then is that going to inflate costs for the end buyer for different things, or is this a tactic and a strategy for something larger in the political space? I'm not sure. So I think it's just wait and see.
Wait and see, right?
I can't add any value here that you can get from a different podcast and somebody that knows something more.
All good.
I don't like to position myself.
That's like okay. Well, I'll just cut this part. I don't know what else to talk here. Okay, Jason, I want to know about your portfolio. Like what? Like you, Jason. So tell me, Jason. Wait, you gotta play it. I'm gonna be really sarcastic. Jason?
Yes.
I want you to tell me your real estate portfolio. What does that look like, and when did you start?
I mean, I really started about 5 years ago. Okay. And as far as growing the portfolio, I mean, one of the first investments, like I said, was with my brother-in-laws, and we went in on a townhouse here in Hawaii. And yeah, we got in at a really good time. I'll just share some quick numbers. Like we bought it at $740. Right. Okay. We got a flex unit townhouse, and so we split it, a 2-bedroom upstairs and a 2-bed, 2-bath upstairs, 1-bed, 1-bath downstairs. And we're renting it out and cash flowing, over $1,500 a month on it, which is great. And from an appreciation perspective, we got that 3 years ago, and it's already appreciated over $200,000.
Wow. So 3 years, $200,000.
Yeah.
That is a lot of money.
Yeah, it's nice. It's really nice. And obviously that's just sitting there. We're not touching it at all. We might find some ways to pull some of that equity out and reinvest it and stuff. But that is real appreciation that is sitting there, and it's only going to get better. One of the things that we said when we got into this partnership was, yes, we were family, but we want the understanding that this is going to be at least a 10-year, partnership on this one, because we were all in it for the long game and in it for the appreciation. None of us said, hey, we want to sell within a couple of years to, cash out. So yeah, that's real appreciation there. That's been great.
And where did you learn this real estate? Like what drove you from that transition of, hey, I want to get into real estate. Like what motivated you?
I mean, I've been around real estate my whole life. My dad was a real estate agent. My mom was a mortgage loan
Hey.
officer.
Oh wow, I
Yeah,
didn't know about your mom too.
yeah, they were kind of like the tandem. For a minute there, they kind of ran their own company where they were, doing it together. So they were a good pairing. And so I feel like I was adjacent or around it my
Yeah.
whole life. I was in financial tech. I was building mortgage loan origination systems for banks.
Wow.
I was at Rocket Mortgage, but I never
Wow.
actually got into the real estate game. I was adjacent to it. And so I feel like it was my destiny in some ways. But also I started to see, 15 years in tech and corporate America, I realized the higher I go up the ladder, the more responsibility I have and the more like headaches I'm going to have. And I'm not any closer to ownership. Right. And so I felt like real estate gave me the opportunity to actually own my destiny, physically own assets. Right.
Ooh.
And drive that a little bit more.
I like that. I like that.
Yeah.
That flowed really nicely. Real good. I gotta have to write that in my book or
I
something.
practiced that in the mirror 10 times. No,
Yeah, you probably did. No, that's great.
Yeah, but it's really about like taking control of my future of ownership, and really just it took 15 years for me to realize that, right? That I was just climbing up this ladder that wasn't getting me to where I wanted to be.
Gotcha. So you have that one property, and do you have any other property?
Yeah, so I really got into a lot of partnerships.
Okay.
And so I partially own 5 other properties, I think.
Okay, that's great.
Across Hawaii and the Las Vegas markets. So those are the markets that, and one in Texas too. I always forget about that one. So yeah, I have a Texas and Hawaii and Vegas. So most of those I've gone to partnerships. So I have anywhere from, 25 to 30 to 50%. A couple I own outright. And so, yeah, those were all opportunities that I got into with other investors. A lot of them I did creative finance. And so, either seller finance or subject to. And so we're able to take some of the capital that we have, split that, down payment or entry fee, and split the equity and get into more properties together. So it's just kind of my way of diversifying my portfolio into multiple properties instead of like putting them all into one basket by myself, right? So diversifying the risk and all that.
You said it spot on. And what is your goals for the next couple of years? Like, are you planning to acquire more?
Yeah, so I have been around a lot of people doing fixes and flips. I've done a lot of burrs where I'm, buying, rehabbing, and holding, but I do want to do more flips. And so, yeah, I think this year my goal is to do anywhere from like 5 to 10 flips. And of those flips, I'd like to maybe hold 1 or 2. So I'd love to grow the portfolio by, 2 or 3 properties this year. And just to continue to grow. I don't have a certain number of properties I want to own in the next few years, but if I think flip 2 or 3 houses and keep 1, or however that math works out, and I think that's definitely a goal of mine.
What do you think is the most challenging issue that you've had and come across in building this portfolio and in this real estate market?
I think growing fast was something that last year, my theme for the year was like action. And I just told myself, I'm going to just do it all. Right?
I remember.
Yeah. And it was just like every piece of action, I'm jumping on it. And, there was a point in the year where I was like, whoa, I'm taking on too much too fast. I'm going too fast. I think I need to, calm down and get systems in place, figure out what, how to make all these things perform really well. Because you can't just acquire a property. You've got to get it stabilized and you've got to get it to perform, right?
Right.
And I was just like, acquire. And I was like, wait, I need to stabilize and then help these perform. And so that was probably the biggest challenge, was slowing down and understanding that the stabilizing and the performing part of that phase, those different phases of real estate are just as important as the acquisition. It's fun and it's sexy to sign closing papers and close and acquire properties, but if they're not stabilized and not performing, why did you get them?
Right.
And so I think that was a big challenge for me to do at the highest level, or I'm sorry, at the accelerated growth level.
And Jason, it's been really a pleasure kind of talking and, learning about your experience and bringing these golden nuggets to the people. I wanted to ask you, if you were not in real estate at all, I know it seems really hard to think of that. Is there something else you'd want to be doing?
That's a good question.
It always stumps people. It always stumps people.
What would I want to do to, like, as a different career path, or what would I want to do as
Yeah,
far as
just
like
how
what
you
would I
spending.
ideally be doing right now?
Yeah, what you would be ideally doing if you weren't doing real estate. Is there any other interests that comes to mind? And if not, that's okay too.
I don't share this much, but one of the end building wealth in real estate is I want to own a foundation, and that foundation helps and builds up and trains up and coming young professionals. I do feel like when I was in my early career, I didn't have enough resources to learn how to build my resume or get into the career path I needed or find a mentor specifically in my field or show me a different path outside of corporate that I can, build wealth. And I really want to provide that mentorship, or at least the resources, to young professionals, especially because, you think about, hey, if I had to start my career over 15, 20 years ago, what would I want different? I wish I had certain resources. So that's been something that, yeah, I want to provide and build out.
I love that.
Yeah.
I asked this question because I sometimes feel, as we kind of go through life, we're so busy doing, right? As an adult, we have all these responsibilities. We need to, generate income and make money. But sometimes, I kind of want to go to the core of, like, if you weren't doing what you're doing, sometimes we kind of get stuck in doing something that we might not want to be doing because we have responsibilities, because we have kids we have to provide, or a home, or food, etc. So I always kind of want to go back to that question. I ask actually a lot of people this question.
I love it.
What would you be doing if you weren't doing this? Because I kind of want to put it back into their eyes where they can think, oh, wait, under all these layers, I would actually be doing X, if I didn't have these responsibilities.
Yeah.
Because purpose is important in life. And sometimes we get, we're in the rat race, we're just so busy,
Yeah.
But yeah, thank you so much for your time, Jason.
Thank you for driving me around.
Of course, yeah. I hope you had fun. And do you have anything else that you wanted to leave with the viewers in terms of inspiration or anything at all?
Take action. Keep doing what you want to do, and be careful of the stories you tell yourself and the fears that you collect, because a lot of the time those are not as real as you think. Take action. Get in the game. Get in the arena.
Get in the arena. So please follow for more tips. Like below. I will be providing some information for Jason below. So if you wanted to reach out to him, that's it.
Thanks so much.
Peace.